Forex day trading. I'm going to show you some techniques here that you can use and play around with, and I think you might just like it. So what we're doing here today is something a little bit unusual, and we are not going to use Japanese candlestick bars. We are not going to use the regular open, high, low, close bars. But one of the secrets, if you want to call it that, or the secret sauce, is to use Renko bars. Now, Renko bars are not really connected with time. So that's the first thing that you need to know. So even though you have to assign it a time frame, each one of these bars, if you can look down there and see, 115, 130, all right, let's see here. Whoops, let's see, 130, then it goes to 2:30. So that's 1 hour instead of 15 minutes. Okay, and then, whoops, 2:30, if you can see the timestamp down at the bottom, then the next bar occurs at 3:45. So these are not really, each bar does not represent 15 minutes. So what you have here is an ATR, average true range, and this one is 14. So you could change that, by the way. I'll show you how to do that. Just go in here. Click on the bars, go to settings, and you can change the ATR. So this is box size assignment method. And so you can do traditional, you can do ATR, whatever. And then ATR length. So ATR, by the way, stands for average true range. So what it's doing is it is smoothing out price action so that, well, let's pull up a regular. Whoops, don't have to do that. Just a regular candlestick bar, and I'll show you what kind of stuff you could be avoiding. So this kind of stuff here. So you see how crazy that is and how markets went wacky up and then dramatically down. Okay, you're not going to get that with Renko bars. And there's other times where, we're not doing too bad here. I don't need to go through too much history. But, yeah, sometimes these bars can be, like here, okay, a dramatic bar down, then the next day it gaps up, and then, it's just kind of hard to really establish, is there a solid direction here? Sometimes, Japanese candlestick bars are good. If you like them, then stay with it. But I just want to introduce you to something else that you may want to consider. All right, so if we go to our Renko bars, again, see how it plots very differently. Just these little like boxes, as they're called. So its purpose is to smooth out price action. I personally would and do always still look at the Japanese candlestick bars and use them along with this. But this is pretty easy to follow. So let's go back here. I'll show you what I do. So as you can see, I've got a MACD down here, and we're just looking for a trend following methodology that would be pretty clear. Okay, so we come down, red, green. So it comes down, and what's happening here? Now we get a couple of green bars. Does that fake us out? And this is where the MACD comes in. So the MACD says no. So even though if you only use the Renko bars, this is not clear. You're not going to be sure. Should I stay short through this up move? Should I stay short through this up move here? These little retraces. And I'm just looking at the two MACD lines, well, the MACD line and the signal line, and they say no, stay short. All right, so it can, any type of bar type that smooths things out, such as Renko, line break, Kagi, point and figure, range. The purpose of all of these, they're different formulas for smoothing price action so that you don't get distracted and chopped up and all of that. So advantages and disadvantages to every one of them, but today we're talking about the Renkos. So I like to filter this with the MACD. So let me show you the MACD settings that I'm using, and then we'll show you the trades. So, that's chart settings. Sorry about that. So we'll just go over here, click on settings. So there you go. Now inputs, I'm just using the standard inputs. All right, so 12, 26, 9. So we keep it at exponential. Now, I turn off the histogram, so I uncheck the histogram bar. If you like the histogram, you want to use it, that's fine. God bless you and the horse you rode in on. Modify this to the way that you want. But for me, I don't use the histogram. I use the MACD line. And then the signal line is a moving average of the MACD line. So the MACD line here is our green one. And the signal line, the moving average of the MACD, is the red one. And all I'm looking for direction is green to be below red and for them both to be going down. For shorts, for longs, just the opposite. Green above red and both sloping up. So when we're going short here, we're looking for this. Green below red. Red of these types of bars here, the Renko. And if you want, you can also wait for it to break below the previous low, this low right here, where it came down and retraced. All right, so if you wait for that, that gives you even more confirmation, but it prevents you from getting faked out by this move up, prevents you from getting faked out by this move up, it comes down. All right, now we get green, and you'll notice that the two MACD lines start moving toward each other. All right, so now we could get a little long trade here. That'd be a little scalp trade. Didn't last too long. Again, here, a little bit of noise. Now, that's very important for you to understand, no matter what type of smoothing bar, any of these puppy dogs down here, there is a point where they still provide noise. There's going to be a time when, yeah, they're smoothing, but you're in a choppy market condition, and therefore there is a level of whatever it is, range, if you're using range bars, or average true range, or whatever, where it's not breaking out of that mathematical containment, and therefore it just barely does, and then it comes back down into it. So these smoothing bar types are not the answer to everything. I wouldn't trade them alone, never do. So as it comes up, okay, we get again a little red bar, goes up, all right, and then we get a red bar, and oops, there we go. They start coming back toward each other. So use, your favorite trailing stops. You might even want to use your trailing stops on regular candlesticks. This is primarily just to keep you into a good trend trade. All right, and sometimes they'll get you in late. By the way, that's another thing with smoothed bar types, is that they will get you in a little bit late. So we're not going to buy here. We'll wait for the trend to go. I love that it got above this high. And then I'll take that first retrace. Goes from green to or red to green. Again, MACD saying, yep, we're good to go. Okay, now here I'd be looking for shorts. Again, look for the first cycle high after green below red on MACD. And here, not much profit. Okay, again, now it doesn't break above there. Could still hold down, but now everything gets funky over here. So sometimes it'll get you into big trends, sometimes little scalp trades. Same thing here. Got our first red bar. Now here you might say, but we got a red bar here. Yeah, we do, but green is still below red. MACD line still below the signal line. So you got to wait for the green line to get above the red line and then take it after the first red bar. All right, so boom, same here. All right, in fact, here we get our first green bars, then the first red bar after the MACD is turned over, the lines have crossed. There you go, there's a nice big one. Nice big one. Okay, again, little short trade. And, well, that's where we are right now. So not every trade system is going to get you into, every single big trade or trend. Sometimes you're going to get small ones, little ones. But the cool thing is that, even on these little ones, you can get these and get out on like break even or make a buck or two. But then when the big ones catch, oh, that's, it's easier. I like the simplicity of it. Einstein once said, make everything as simple as possible, but no simpler. And not that he was a day trader, but I think it does apply to trading as well. You don't need a whole bunch of stuff and confusing things to trade, and we're always seeking to get simplicity, and that's very important for the psychology of trading so that you don't get mentally overwhelmed. The one thing I would add to this, as well as everything else, is my cycle indicator. That's what triggers me into my trades and is very precise, super precise, and I'll be happy to give that to you. Just go to indicatorwebinar.com, and I spend an hour there giving you all the details of it, showing you how to set up a chart and how to trade it. So go get it. Hope this was helpful. Play around with it, and hope it makes you some good money.